And welcome to another update video on Solana. Here on the Solana chart on the daily time frame, we are still looking at a potential 1-2 setup or AB setup. The overall structure remains unchanged. We have seen quite a long overall sideways consolidation pattern, you could say. If we zoom out, it really just looks like consolidation since the March 2024 high. We had a dip at the time in 3 waves. We had a rally, potentially a B wave rally, and then a C wave down. So A wave down, B wave up, C wave down. So it is possible a low is in this internal 4th wave. That's one scenario. In the yellow scenario, and we're moving up towards $360. There's a lot of work that the bulls need to do to really take the price there. Please note this is seen only as the last part, the last element of this rally, of this cycle that started in 2022. And it's going to be the most difficult part, so a lot can go wrong along the way, but this is still preferred as long as we're holding above the $109.78 level. At least in this area, we can watch for reactions. Now, a more bearish interpretation would be that the overall cycle is already complete. That wouldn't even be a problem for the chart long term, because this already is like a 5th wave to the upside. Yeah, in January. So it already fulfilled all long-term upside expectations. Just from a target point of view, it would be ideal. We talk about what's ideal here, that the market might go a little higher, but it will depend on how we react to the support area here, which is located between $109.78 and $143.98. In the very short term, seems like the market is still working on this correction. Let us also take a look at the shorter time frame for Solana. So this is the short-term chart that you know about already. In yesterday's update, we already talked about the idea that, yeah, we could go a little bit lower in this correction. So support between $109.78 and $132.71. And we can track this as an A wave, done. B wave up, done, which topped on the 11th of June. And now a C wave to the downside. In a very direct move down, it could take us into the area between $129 and $109. However, if we get a break above initial resistance, and so far that has not happened, and it might not happen over the weekend, but we'll see. A break above $150.40 could indicate that something at least short-term more bullish is playing out. That would not be a really bullish setup, but it might mean that the B wave that presumably topped here on the 11th of June is actually still unfolding, and we're forming a wider A, B, C structure before we start the C wave down. So you see, this would be a very similar structure. It would simply mean that the B wave is extending a bit, which is very likely, because when the A wave is a 3-wave move, then the B wave can be quite aggressive, can be quite extended, can turn into quite a complex correction, which means that at the moment, we are watching if the market reacts to this resistance area. I would not be surprised if it breaks. I mean, we have fairly strong support here in this area as well, around the 30th of April low, the 6th of May low, the 5th of June low. So there's fairly strong support in this area around $140. But I'm watching for reaction to resistance. But as I said, we might spend some time in consolidation mode here over the weekend. So parameters should be clear. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. Thanks so much. Bye-bye.